Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 21st of April. I'm Phil Carroll.
I'm Kevin Hornsby.
I'm Charles Archer.
It's season 8. Who'd have thought? A nice Easter break. Anything happen, Kev?
Yeah, that's the understatement of the day, I think. Yes. Just a few things in the geopolitical world, anyway.
But I mean, how's you? Obviously, we've had a couple of weeks off. Season 8. Who'd have thought we'd be here now? I mean, what is what's been going on in your life? Have you been away? Had a bit of a break?
I went to the north coast of Egypt, which is the Mediterranean, just to check out the work that's happening. The villa that we have up there. Yeah, it's a building site. That's all good fun. And somebody turned the oven on in Egypt, which happened about 2 weeks ago. Slowly heating up each day. So we can start using the swimming pool, which is a positive.
Wish they'd turn the oven on over here because it's been probably one of the worst sort of springs on record. Certainly one of the worst winters. But let's move on. Obviously, we're joined by Charles Archer, journalist and analyst, as you heard then, and Paul Johnson, investor in Junior Resources, riding the early stages of sectorial tidal wave, as his ex-bio suggests. Welcome, gents.
Hello.
So let's have a look at some of the news stories which have dominated the headlines this week. I mean, the one that's been big in the news over here has been Israel and Iran. Just when you thought it couldn't get much worse in the Middle East, we saw Iran launch 300 drones and missiles towards Israel. Luckily, 99% of those were successfully intercepted with the help of the Iron Dome system and the UK and US fighter planes. And then overnight, we saw Israel again sending missile into Iran, apparently landing and hitting a strategic target there. What do you make of that? I mean, we've talked about this in the past, and the sort of the propensity to spill out into the further Middle East from the Israel-Gaza situation. What do you make of it?
Okay, I'll go first.
No one wants to take it.
Lovely. Well, so I think the first thing to say, people tend to pivot from, I don't know, you're a junior resource expert or you're a political expert and now you're a Middle East expert. And I think the first thing to say is that there's very few people in the world who actually know all the whys and wherefores of what's going on in the Middle East. So, between the political differences and the states and the different groups and the religions and the sects of the religions, it's virtually impossible to know what's going on at any one time. I mean, my personal perspective is that both sides feel that they need to respond in a tit-for-tat, eye-for-eye situation. Hopefully now they've both felt that they've sent a message to each other and it will stop and it won't escalate. And these things do tend to, over the years, you tend to get these kind of headlines, a bomb's been launched or whatever, and then it stops. So hopefully that's the end of it. The problem is obviously with Israel and Gaza, the region is so volatile that it feels like a match will get lit and then everything will go off all at the same time. Hopefully that won't happen, but we just don't know.
Yeah, so I think if you look over the history of many thousands of years, there's been underlying trauma and troubles in the region. And the expectation that we have sometimes in the world is that everything is peaceable and calm, and it simply isn't. There was quite a long period of perceived calm in Israel, and then all of a sudden there were the attacks. Some quite nasty attacks some time ago that seemed to spawn a whole new campaign of violence on all sides, really, which is a great shame. The problem we have, I think, is that the media generally, we now know, doesn't really report accurately on what's happening on these events. And you layer that onto the complexity of the situation and the long-standing nature of the trauma, then it's difficult to know, sat in the UK, really what is going on. But it does appear to be somewhat muted in terms of what's happening, and the US appears to not want to have major conflict, which is, given its close association with Israel, is a good thing. So hopefully this will simmer down and we can crack on. From a geopolitical perspective, there are obviously many people with far more experience, but the one thing I did note when it was the gold price reaction. On Friday, there was a peak in gold on news, I guess, of what happened with Israel and Iran. It went up to over 2,400 again, and then it settled down quite quickly. So I think it just shows that the markets actually can assimilate, assume, or adopt the information that comes out from the various parts of the world quite quickly. They might get the shock factor initially, but then they seem to be a lot more stable. So I take some heart from that.
Yeah, I mean, the only thing I would say on Israel and Gaza regardless of, I don't really like them using the term sides, but eventually there will be some kind of peace deal, as there always is.
Yeah.
And it needs to be something everybody can live with long term. I think this is a mistake that continues to be made. But the problem is that they both have red lines which conflict with each other.
Sure.
So yeah.
And how much do you think of this is Netanyahu? Because he's obviously come back. Cameron's been out to Jerusalem. He's had the meetings. He's sat down with him and said, enough's enough. Please don't retaliate. And he's turned around and said, well, we'll make our own decisions based on this, and asserting the necessity to defend itself. And we know that Netanyahu, before the Israel-Gaza conflict, was losing control of the country. There was a lot of protests in the streets in Israel. People really had lost faith. It was almost like a corruption side of things going on. How much of this is him sort of posturing for setting himself up for the next election, as we've seen so many other people do, and using war as a kind of, as a tool?
Unify. Yeah, I mean, it is possible that is what he's doing, at least partially. There's always, you can have more than one reason to be doing something. Yes, obviously, you can use a war for political advantage, but I also think that, I don't know. I don't know. I honestly, I don't know. I think it is difficult one,
yeah. And I guess the next question leading on is, like, under Trump, the US was not involved in any wars, and a lot of their Trump supporters always push that narrative. Do you think the world would be a safer place with Trump running as president if he won the next US elections?
Well, I think that Biden has literally lost he's lost his mind. I think Trump's probably not far behind. So ideally, you'd have neither of them and somebody else. But between the two, I mean, it's not much of a choice, is it, sadly? Trump is like a loose cannon. So you can't predict, say, what he's going to do. So the problem that you have is, in political theory, potentially that's what you need. You need somebody who, if the most powerful army in the world, which is what the US is, you don't know how they're going to react to something you do. Yeah. You're going to be more cautious.
Yeah, it's almost like the fear factor of the other nations around him, because they have no idea how to read.
No, there's no clue. No. But, on that, I mean, you have to be 35 to run for president in the United States. I think, there should be a maximum age limit. If you're going to have a minimum one, you should have a maximum one. I think 70 would be perfectly reasonable. And yes, it may sound ageist, and yes, that may be a problem, and I think it should be the same in the UK. You start to lose your marbles when you get older. It's just, it's coming for all of us.
Okay, let's move on to something a bit closer to home. The UK Parliament passed the second reading of a controversial bill to ban smoking for future generations with a vote of 383 to 67. Despite strong support from many MPs, the proposal faced significant opposition from senior Conservative figures, including Kemi Badenoch and Anne-Marie Trevelyan, who expressed concerns about enforcement and the impact on private businesses. So do you think Sunak's smoking ban's likely to become law with Labour support going forward? And how does that relate to some of these stocks? We've seen the vaping company actually putting together money towards the government to set up this pro-vaping committee. What are your thoughts on that, and how it affects these companies like Chill and Supreme in the UK?
Well, New Zealand tried it, and they rolled it back now because it didn't work. My general perspective is that it's very complex, because in this country, you become an adult when you're 18. And obviously, it's a bit fuzzy because there's stuff you can do at 16 or 21 or 25 that you can't do at 18. But at 18, as a general rule, people say you're an adult, you're criminally responsible, you're a member of society. And when you say some people over the age of 18 moving forward are going to have the right to buy cigarettes and others don't, that creates conflict in law, which is never going to work. It's not going to be enforceable at all. Now, what will happen is, if you do enforce this law, is that you'll just create a black market like you do for every other drug. And it is closely tied into the vaping legislation. For example, the government is proposing to ban disposable vapes. But again, you only have to look across the world. Australia did this. And it's a disaster because you have no quality control, and you're just having masses of unregulated disposable vapes flooding into the country. And the shops are making so much money from it that it's worth the risk of the fine. And that's what will happen in the UK as well. So I think when it comes to tobacco or alcohol or drugs, a lot of our policy is dictated by sentiment rather than logic. And I think that's exactly what's happened here. I just don't think it'll be enforceable. I hate the idea, for example, that 30 or 40 years from now, is someone who's, 52 can buy cigarettes, and someone who's 51 isn't allowed to. It's just ludicrous.
Yeah.
So I think it's garbage. But then I think Labour will continue to support it. And so we'll have, this joke legislation for a while, and then it'll get thrown out when it doesn't work.
Yeah, I mean, that's Generally speaking, I think politicians are absolutely fantastic, and governments generally, as long as they're not responsible for defence, social care, finance, law, education, healthcare, and those are done by external agencies. But in fairness, this is another one of those fantastic Conservative and soon-to-be Labour unfunded policies, because I think most sensible people that have a calculator can work out that smokers are very cash positive for the country. They spend a vast amount of money on things like drinking and smoking, and they die sooner.
So you don't have to pay out a pension, exactly.
Yeah. I remember a comedian a few years ago who was a smoker on stage saying, I've been advised to stop smoking because every cigarette, knocks 3 minutes off my life. But I found out that it's the bit at the end when I'm in a chair watching crap daytime TV and I've got nothing to do.
Yeah.
I don't really mind as much. And it's true. You can't fiddle with these things. It's a very sensitive debate for me. The concept of drugs and kids and all the rest. It seems to be in most sensible jurisdictions, as long as you legalise everything and put controls in place on it, you do get quality control for sure. When it becomes less elusive and you haven't got those forces of distribution that can make vast profits, it seems to have the impetus taken out of the thing. And at the end of the day, it's about personal freedoms. And
100%.
I mean, they were destroyed during COVID restrictions. And this is another part of that process. If someone wants to smoke, fair enough. Rules, laws to prevent them from impacting others is absolutely perfectly reasonable. So no smoking inside in bars and restaurants, no smoking in family cars, and that kind of thing makes perfect sense. This is just above and beyond, and it will, like most of these nutty policies, collapse.
But it's the concept in law is residual freedom, which is you can do whatever you want unless the law bans it, and if the law wants to ban it, it has to have a very good reason. Now, I think one of the problems is trying to define, who is responsible for themselves, and what we've decided as a society, 18, you're an adult, and therefore I think the argument is we should be selling no cigarettes and no vapes and no drugs or anything of that kind to anyone under 18 because they're a child. And everyone agrees on that. But the issue is that an 18-year-old, and I know I was, and most 18-year-olds are, they don't have any life experience. They're not that, not particularly bright generally. And therefore, if you have companies that can aggressively market these things, alcohol, tobacco. My first week at university, I spent all my money on alcohol. It was fantastic. Probably wasn't a good long-term decision. But
I'm like to what you are now, didn't it, Charles?
Yeah, well, indeed. And if I invested that money, no. But I do think though, it is really interesting that if someone joins your office and they're 19, 20, 21, and they make a mistake, 9 times out of 10 people are going to help them deal with it and cover it up. And it's not a big deal. If you make the same mistake in your mid-30s, then you have to live with it. And the reality is that even though you're an adult at 18, you're not really for a few more years until, in the eyes of people around you. And therefore, how do you apply that to alcohol and tobacco and drugs and everything? I don't know.
I think you'll find, though, that a lot of the Gen Zers, as they call them, they're actually very sort of health-oriented.
Yeah, they are. Yeah, very sadly.
They're into the gym. They don't drink. They're teetotal. So that they're very unlike. I mean, some of them vape. Yeah, the vaping is more of their thing. It's more of a fashion element. But in terms of actually smoking and drinking, you'll find a very low percentage of them actually do it.
Is it just cyclical? What will happen is they'll grow up and then their children will be like, we're going to drink.
Maybe. I think our gen, the sort of what do we call probably the millennials and into the boomers tend to be quite heavier drinkers. It's all about that lad culture and going out with the lads and everything, and they're sort of very heavily centered around pubs and nightclubs, etc. And our generation, we're very much heavy drinkers, probably more so than our parents, than the boomers.
Possibly. Yeah. Well, I don't know. I mean, the advice I got from my grandparents is always drinking, smoking, and gambling. You can pick 2 and not ruin your life. If you do all 3, then you're going to have a problem.
Yeah, absolutely.
Yeah. So junior resource and drinking, that's what I picked.
So, I mean, the interesting thing is we have the governments decided that there is no morality in society anymore. And we actually really do have to be such a nanny state that we legislate for everything. Now, the problem with that is you cannot enforce these things because you don't have the ability to enforce it unless all of a sudden we become a military state. So what is the scenario? That the government is becoming people's consciences?
Today, I mean, the problem is that, as Paul said, all your freedom took taken away during the pandemic, and then the government gave most people in the country a big check of cash. So the government looks after you, and then the energy prices soared and the government paid for energy bills. And then there's a cost of living crisis, so anybody on a low income got additional cost of living payments. And I'm not saying any of that is, in terms of financial terms, is bad, but the problem is you now have an increased dependency on the state, and when you have an increased dependency on the state feels like it can do whatever it wants, and that's essentially the way it is at the moment. It feels.
I think they saw how compliant the majority of people were during lockdown, that they probably think they can, as Kev says, they can enforce it all on people, and everyone's going to. But the danger, as Paul alluded to, is that once you start putting crazy bans on things. And do it in a strange way, like ages. If you were born before this period, you're not allowed to, and your 51-year-old can, but your 50 can't, and your 52-year-old can. Then you're going to drive it underground, and once you go onto the black market, as Paul says, you know it's not governed. It's you get really bad quality of things. People die from drinking the wrong thing, smoking the wrong thing. There's all these things coming through these vapes. Have you heard of like toads that have got hallucinogenics in them, like toad vapes and things? And people are dying from this because it's been driven underground.
Well, I mean, it's the same as, how much of a crime in London is funded by the drugs trade, right? How many people on the weekend are doing cocaine that's been bought and sold through, a criminal network? If, and I'm not saying all drugs should be legalized, I'm not that kind of person, but if they were legalized, how much of that crime would collapse overnight because there's no money in it? I just, I genuinely, what it is that I think, conservative, small c, I don't want government more involved in my life than they have to be, right? And at the moment, it feels like not only do they kind of just take more and more tax out of a drying stone, they're also encroaching more and more on every single aspect of daily life. To the point where, and it's your job is it's not very difficult. It's to defend the country, to provide a healthcare service, to have state education, to make sure the roads are clean. Wherever citizens choose to like smoke or drink, as long as the taxes raised by that covers the costs of the health service, then that's fine. If the government were to say, well, hang on, all this drinking is costing us way more money, that we need to raise taxes on alcohol to cover the increased cost of the NHS, that would be a different conversation. But it's not. It's we're just going to ban smoking, and not only is it going to cost the country money, it's completely unenforceable. I mean, imagine, like, I know a couple of police officers down here in Exeter. They're already swamped and there's not enough of them. Are they going to go out to attend a call for like a shop that sold cigarettes to someone who's like 36 and they thought they might be 37? And on top of that, does this mean everyone has to carry ID with them 24/7 in order to prove their age? Once you've hit kind of 30, you don't need to worry about that anymore.
That's exactly what's going to happen. That's exactly where it's going. I mean, I've just been checking what the World Economic Forum thinks about this, of course, because we should all follow their guidelines, especially what Klaus says. And
Klaus has gone missing, Paul, apparently. No one knows where he is, which is an interesting one, but that's for another debate.
Well, we can all hope. And the reality is that is the pathway. It's an ID system. I remember 20 years ago, I went to Texas for the first time, and they had to produce ID to buy alcohol. And even if they were like 60, 70 years old, they had to produce ID. And it's a bit bizarre, but that's the pathway. But one thing you certainly can't do is start with adolescents, and stopping people from being able to buy cigarettes. They'll find a way, whether it's crazy parents through to friends, through to buying it from the modern equivalent of the ice cream van. They'll find a way to do it. And they're not going to think about it. They're just going to do it because we all know, adolescents, their brain develops at a slightly slower pace in certain areas. Is it the prefrontal cortex, the one that's about planning?
25, apparently.
Yeah, it doesn't kick into the mid-20s. So we've got to think like adults, not like children. And unfortunately, our government at the moment are in such disarray. They're behaving like a bunch of school kids, so with their policies on occasion.
Well, Paul, but if you live in the West, you have been put under this regime, and I call it a regime because that's exactly what it is. You are under a regime, and it's one of the reasons why not living in the West now, I could see it as clear as day. Like most of the countries that would have been seen as, oh, that's a dictatorship, or that's that, or that's this. There's a whole load more freedom in those countries than there is in the West.
Yeah, I mean, we have things in business that we have to be very careful of, bribery and corruption, and they slate other nations from the United Kingdom of of how they see bribery and corruption, but we call it management consultancy, and apparently it's okay.
Yeah.
As long as you pay VAT on it, they accept it.
I mean, on that, I mean, the thing is, there's going to be an election. It's probably going to be in January 2025 because Conservatives will never let go of power until they absolutely have to, in my opinion. And the issue that you have is that what we have on the other side, Labour, they only look competent because the Conservatives are so god-awful. But if you were comparing the Labour cabinet and the Labour leader to a competent set of politicians, they would lose every time. It's just what I worry that we're going to have a very incompetent government with a very large majority again in a few months' time.
Yeah.
And what are they going to do with power?
Are you sure Keir Starmer's a human and not an AI robot?
I think people think that the UK is bad under Conservatives now, but I think if you could look forward 18 to 24 months, you think it's bad now, you wait and see how bad it's going to be under a Labour government. That's just my thoughts. I don't know I just fear for it, to be honest.
I think that the country runs best when whoever's in charge has a slim majority, which tends to mean that if you come up with an insane policy, there will be enough rebels to stop it from happening. But if it deserves to be passed, then the insane people on the other side will pass it. And what will happen is Labour will most likely get a landslide because people won't vote Conservative. They'll come up with some zany idea like all politicians do, and it'll get passed without question because they have a huge majority. It's a disaster. But
So here's a question for everybody. We all pay UK tax, right? Do you want your UK tax pound to be funding Israel and its war against Gaza, the Ukraine, and the war in Russia? Do you want that? Those two specifically, or any other?
Yeah, I think the answer is no. And you bring up there was a really interesting stat I heard on something recently, and it said that the amount of money that the US has sent to Israel and Ukraine over the last sort of year and a half, something around $90 billion, could fix the US homelessness 5 times over. Get your head. I mean, it's sickening to think that. I mean, yeah, I understand that they've got ties with Israel and want to help prevent Russia from making advances, but just like, why can't we fix our own issues rather than sending aid? I just don't understand the mentality of that.
Well, this isn't aid. I'm not talking about aid. If we were talking about
aid, weapon funding, what help other they call it aid.
Yeah, it's not aid, is it? Like to drop bombs on people and to intercept bombs from Iran and all the rest of it. I mean, from the point of view of the Middle East, I would suggest that Iran basically realized they sent 300 weaponized things, and effectively it had no impact whatsoever on Israel. So as far as Iran's concerned, they can have limited impact in terms of what they can do. So why continue? And that's why Iran, I think, ended up saying, okay, we've retaliated, we've done what we've done, it's over. And they pretty much said that. Israel now sent something back and said it's not over, but we have to retaliate because it has to be seen that we are not accepting what you did. The reality is that in 1897, 127 years ago, we created modern day political Zionism. Okay, and Zionism was basically that the Jews could not survive unless they had their own home nation. And that has been 127 years now of complete bloodshed to get a land in this particular place. And it wasn't always necessarily going to be this particular place. There was talk at one point that it would be an African nation, that it would have that. But now it has become this. Now, until that whole land becomes Israel, this ain't going to stop.
Okay, let's not go too political, but while we're in the Middle East, Dubai, did you see the catastrophic flooding that happened in Dubai? I mean, that was some rainfall. They had 18 months worth of rain in just 24 hours. Obviously, major disruptions. We saw the Dubai airport, which effectively became a lake. There are claims that the UAE's own cloud seeding operations might have contributed to the severity of the storm. So basically, these cloud seeding flights, which aim to enhance the rainfall by dispersing substances into the atmosphere, were reportedly conducted in the days leading up to the storm. So they reckon that they've overcooked it on this cloud seeding and created this massive storm. So, yeah, what are your thoughts on it? I mean, is it the start of many more floods to come? And, we saw it in Oman, which is apparently a different weather system where, unfortunately, people perished. Yeah, it's maybe it's a new thing with this cloud seeding we're seeing.
It sounds a bit like a conspiracy theory that they're conveniently timed. In fairness, is it?
They do seed though. They've admitted they show video. If you go on the government's website and actually the operations, they fly.
Yeah, they go what they ask for. The average rainfall in Dubai in April is 8 millimeters of rain.
Yeah,
and they got something like 280 millimeters of rain in 24 hours.
And then has that happened before historically? What's the weather pattern?
Yes, it has happened before historically.
75 years apparently this is.
So this is a near 100-year event, but they do happen. I mean, they happen, around the River Severn, where there's vast flooding when things accumulate and come together at the same time. I mean, I'm from Manchester, so the concept of rainfall and flooding is quite a regular feature for me. But
it's the wettest place in the UK or even in Europe, isn't it now, Manchester?
It certainly is. I don't think the sun shines there anymore. I'm getting back for
Is that why Oasis are always singing Sunshine?
I think Wonderwall refers to the Pennines, actually. But
as the scouts are in the room, they're all wet.
Oh yeah, just calm down.
Calm down. It's not that wet in Liverpool because we don't have the Pennines, and then the rain comes in, we get a bit of it, and then it rises and then just dumps on you lot. That's
but you got the Beatles, and that's painful enough. So
yeah, indeed. No, I mean, I think they've tried to initiate something, but I think they've tried to play God. Ultimately, maybe, God has answered them in a big way, and also they've added to it as well. But, yeah.
Yeah, all it's just a once in a 100-year event. The interesting thing will be if it happens again. And I think the big thing with Dubai or like these places in the Middle East, they're not set up for heavy rainfall at all. Like if we have it can rain for a month pretty much anywhere in England straight. And, we'll have a bit of flooding, but we're used to it. We know what to do. They don't have the infrastructure at all. It is just...
well, if you look at Dubai,
videos,
huge amounts of Dubai is reclaimed land from the Arabian Gulf.
Exactly.
Okay, so that they've built the land up from the sea. So, you start adding water to that environment.
And the drainage system is pretty much non-existent. Or
they don't need it.
Yeah,
it's the same here in Egypt. They don't put a drainage system in place. I mean, we had a bad storm here during COVID 3 or 4 years ago. All of the garages were basically just flooded, and they go on a bit of a slide. So if your car was in the bottom garage at the far end of the compound,
it became
it became a speedboat, exactly. So I mean, they were all calling movie cars because it was like. Luckily, we were at the top end, so it didn't cause us a problem. Just the water was rushing past the cars. But, yeah.
Right, so let's move on to some of the market, the movers and shakers this week. I want to talk with you, Charles, as well, and hear also Paul's thoughts on this glut of companies that we're seeing that have announced or announcing plans to delist from either AIM or, the standard list. We've seen Molecular Energies, MEN, Biotrol, RedX, and then most recently, the British clothing giant Superdry announcing its plans to delist from the LSE, closing 39 UK stores as part of a radical restructuring strategy aimed at reviving the core business. Company intends to raise $12.4 million through equity, with options including a possible underwritten open offer by founder and CEO Julian Dunkerton for up to $8.5 million or $12.4 million placing, exclusively participated by Dunkerton, who holds 26% of the company. So, what are your thoughts on it, starting with you, Charles? I mean, we're seeing this glut of companies. Obviously, the share price on the announcement the following day usually is decimated because obviously people panic and they want to get the money out, and understandably so, they know that they potentially won't be able to trade it. What are your thoughts?
Well, I mean, it's interesting that it's not just the very small cap market; it's also the mid caps. If you look at Currys or Hotel Chocolat that was bought out by Mars, or Royal Mail recently, and there's been a few others in the FTSE 250, or UK companies are just horrendously undervalued compared to anything else international. Is there a reason why for this? I mean, you could put some of the blame at the LSEG, but generally. And because LSEG just makes its money not from listings anymore, so they don't really care that much about it, which is another big problem that needs to be dealt with. But at the small cap end of the market, a lot of these companies that are delisting are companies that are not profitable and are in early growth stage and are potentially quite high risk. Now, the issue that you have is that as a private company, you can get access to finance a lot easier because your investors can benefit from venture capital schemes where there's huge tax incentives. And so if you look like, I think RedX is going, I think a couple of the small biotechs that are going like RedX are going over to JP Jenkins, for example, which is a firm which provides private companies with investors and liquidity, and they've got access to brokers, and they essentially have everything that they need, apart from you're not publicly listed. And it's a lot cheaper than being listed on AIM. And, the problem is that from my perspective anyway, and I work with both private and public companies, is that the private companies can get access to finance on better terms than the public companies can if they're not cash generative yet. That changes once they're profitable. I think this is the key thing. If you're a junior resource company searching for gold, for example, and you're not making a profit yet, it's risky to give you finance. If you were a private company, you can get hold of that finance fairly easily. If you're a public company, it's much harder because there's no tax incentives. But if you're like a growth company like Bolex, for example, whose CEO came in and started praising, the AIM market, that's fine because you're generating profit and you're making revenue. So getting hold of finance if you need it to grow is very easy because risk-averse fund managers in the UK will give you the cash. But I think we're going to see more and more small caps, especially in the biotech sector, go private because they realize they can get finance on better terms. And if you speak to any number of high net worth investors, just ask them, most people are open book. They'll tell you exactly the same thing. If they invest in private companies, it tends to be the case that you get better tax incentives. So it's very difficult to see, what needs to happen. You need to redress that imbalance. That's my perspective. What the government needs to do is say, right, if you list on AIM or list on the London market, you will retain some kind of tax advantages for a certain period after you list, for example, might help. But I feel potentially it's beyond my pay grade. What do you think, Paul?
Well, this is a bit of a theme for me because I'm afraid the setup at the moment is bollocks for the small caps, and it's quite shocking. To list on AIM costs you on average between £400,000 and £800,000. Bear in mind that AIM is focused on entrepreneurial growth companies. I mean, what sensible entrepreneur or growth person actually thinks it's a good idea to sink £500,000 or more into lawyers, accountants, auditors, advisors, nomads, and all the rest, every person and his dog in the listing process rather than investing in their business development? It costs between £200,000 to £400,000 a year to maintain that listing thereafter. That doesn't include salaries or any of the office costs and that kind of thing. That's just for nomads, advisors, lawyers, exchange fees and the like. So I guess that, and that's before you get to the cost of financing, the shorters on the market, the manipulation on financings, heavy discounts and all the rest, which made the cost of capital shocking. And in fairness, even in good times, the cost of capital is relatively shocking. It's not just the bad times. The cost of the rules, it's an excessively regulated environment where, amazingly, this is what you can't do. Get this, it's a shocker. If you are planning to move your business forward and you want to talk to the market about what you're thinking of doing and what you're working on generically at that point in time, you're not allowed to do it unless you have crystallized transactions, I think is what they say, or unless you have a completed transaction that's announceable to market. You're not allowed to talk in general terms about the direction of your business. It's amateur and quite bizarre. And then it's the pressure on management, because management of listed companies have to answer to shareholders, as they should do, but they come under with social media inordinate amounts of pressure to engage and spend vast amounts of their time doing things which are non-productive for the development of the business. So why do sensible, large, high net worth individuals generally choose to go through the private side of things? Is because they know that money is being deployed, not wasted on vast quantities of exchange costs and advisors, but on development of the business, and they have a far greater, with a medium to long-term view, chance of making significant capital. So I think that's the cause for poor markets as well, but that's the cause for the reduced amount of listings, and the exchanges need to get a grip on this and start to introduce low cost.
So do you think, Paul, that those costs that you say just to maintain that listing of between 200 and 400k, say, as a rough out, do you think they're justifiable, the cost? What do you get for that money?
No, neither do I think. But I mean, generally, many listings now are about £700,000 to £800,000 of costs on AIM. But this falls under the Pareto distribution, I think, is the law, which says that it's the 80-20 rule. And I believe that 80% of the valid due diligence for a company listing on the financial markets can be conducted with 20% of the effort. And I think the vast majority of the spend is on pointless, almost point scoring, actually, and minutiae. Producing an admission document that's 400 to 500 pages long that no one, unless they are verging on insane, actually read.
Going to read, yeah.
Yeah. So let's call a spade on this and just go, you need to cut down the time to listing from between 6 and 12 months to 3, cut down the maximum cost to 250,000, focus on the key essentials and give these companies support on market and let them be entrepreneurial and talk to the market about what the feck they're doing, because if they don't do that, how on earth can they attract investors?
Brilliant.
Do you happen to know what the costs on Aquis are in terms of maintaining the listing? Because I see a lot of companies coming to Aquis, and it's getting a better reputation. I think it offers a bit of stability against some of the liquidity traps. What are your thoughts on Aquis?
Aquis is an exchange that is lower liquidity generally, but it has pockets of liquidity. So if you look in the past, you've seen it was in 2006-07 the exchange for uranium juniors. It has been in recent times the exchange for biotech, the exchange for cannabis-driven businesses, the exchange for fintech. And, you can see how when those sectors get some attraction to or draw the investor base in, then Aquis trades perfectly well. It struggled for years because it didn't sync up with all the main stockbrokers, so you couldn't do online trading. But that's changing now, and there's a lot more of them coming online. What I found from an operational perspective, I'm not really massively up to date on Aquis running companies and not running companies anymore, but you could do a lot more transactional stuff. You could actually go, in fact, not quite speak to the exchange, but you had a good relationship with the exchange. You could talk to them. The rule makers were sensible. Their advisors were far more sensible and pragmatic. Costs generally a lot lower operationally, not necessarily that much lower, but on listing, but certainly operationally from year to year. Whereas with AIM, you can't speak to a regulation, you can't speak to the exchange, as it were. You have to go through the nomad, and that creates a degree of message loss, as it were, and some confusion. I'd say Aquis, I've always believed it was the exchange of the future for growth companies, because I think at the moment AIM is just losing ground.
I agree.
Aquis, I think, ticks a lot of the boxes that you said that AIM needs to do, because I think it's no more than 200 to 250,000, I think, to list on Aquis.
150 on average is what that's the number I've gone with. But yeah,
150, and I don't think the annual costs are more than about the 150 either, to 200,000 probably. So I think maybe what we're going to see is more and more companies coming there, trying to have some success, and then moving straight to the main market instead of going to AIM. I mean, the problem with the AIM and main market, LSE, it's all LSE, no? It's all owned by the London Stock Exchange. Mm. So effectively, it's a monopoly. So as far as they're concerned, costs, who cares? We're raking it in, so it doesn't really matter.
Self-regulation is a horrible thing in that sense, because you go to someone and say, are you doing everything well? And they go, yes, we are. And that's the end of the process. And unfortunately, the data in terms of new listings and listings falling away, cancellations, are quite shocking at the minute. So at some point, LSE, I guess, are going to take a look at themselves and say what's going wrong, but it hasn't happened to date.
I mean, the only thing with LSE is, obviously run by LSEG, and again, as I said, they make the vast majority of their money now. They rebranded it from Refinitiv, what's it called, like LSE, like data and whatever. They don't make that much money from the listings comparatively, and I think that's one of the big issues. It's not a priority strategically for their business. So it needs to be potentially spun off so that you have one company that actually lives or dies by whether companies list or stay on the market. The reforms that you could have on AIM, for example, I mean, like a lot of people want to ban shorting, for example, but in Australia, and one of the big problems of the shorting is that companies approach brokers for finance, the news gets leaked, there's short selling ahead of the placing. In Australia, you decide you want to do a placing, you apply for a trading halt, the stock stops being traded, and then once you've got the finance in place, you start trading it again. And generally, that means that you get a much better placing price. It's much easier to get hold of finance at a reasonable level. Maybe we should be looking abroad at exchanges that are doing better than us and copying some of their good ideas. I don't know, why we're not doing that either.
I think in Australia there are some restrictions on the discounts that you can easily.
Indeed, yeah.
Well,
It's like 10%, isn't it, or something? I can't remember off the top of my head.
10 or 15% for a certain amount of stock, and then you have a bit of an issue. And I mean, there's still manipulation there because, that 3-day period, the trading halt is quite narrow, but still it's better than what we have at the moment. I mean, surely just look at this from a moral perspective. If you, as a company and your advisors, the exchange knows effectively that you're undertaking a financing at a heavy discount to the current market price, but you are allowing people, ordinary punters, to go on there and buy stock at 1p when you know there's a financing underway at half a pence. Where is the moral compass in that situation? It's just wrong.
Yeah, indeed. And then the other thing, it speaks to the problems with just people I was talking to the other day was about how you should be looking at a company. At the moment, it seems to be the first thing people check is a company's finances for when they're going to need to place next, which is obviously an important part of an investing decision. But it shouldn't be the most important part. It should be, is the company well run? Has it got decent management? Have they got a good asset? Have they got, good prospects? Because the idea is it should be in a decent market that you can invest at any point in the growth cycle. And okay, if they place at a discount and you're down sort of 10, 15% the day after, it's not the end of the world. But if you're down 50, 60% the day after, having, just been told it's the best thing since sliced bread, then it is, and it really drives the trust out of the market. Again, that's something that needs to be done about that, but I'm not sure what the answer is if you can't get hold of finance on better terms. And again, as I say, I think a part of it is the fact that, private companies have so much more freedom, as you say, Paul, to communicate with investors and therefore, but also I think they can just get finance on better terms for so many reasons, and you need to close that gap. But again, I don't know how easy that would be to do. It seems to me that I'll tell you what, actually, I was speaking to somebody who's leading a private company literally just before we got on this podcast, and we were having kind of an in-depth conversation about this asset, the biotech asset that they have, and I was able to ask them questions and find out information, which is inside information, but they can't sell any shares. None of us can, so it's fine. We can have those conversations, but you can't do it on a listed company, so it becomes harder to justify. Well, I don't know.
If you go for a job, either in the interview process or on the application form, they will ask you, what are your strengths and weaknesses? Talk about scenarios when you've had positive outcomes and negative outcomes and how you dealt with them. When you fill out an AIM director due diligence form, I can assure you those questions are not on there. They want to know if you've been pictured with any goats in the past, and that picture might pop up on Google. But they don't want to know about your talents and capabilities. They are not interested in your successes and how you've made shareholders money and how you've paid yourself sensibly in the past or proposed to pay yourself sensibly. They have no desire to find out what the quality of you as a business person is and your caliber and ability to deliver value for shareholders. Now, I can only assume that's because delivering value for shareholders is the last thing on the exchange's minds. Paying advisors, making sure they tick all the boxes, generating fees appears to be the priority. And the moment that changes is the moment we will finally, in the United Kingdom, have an entrepreneurial exchange. And you're right, Aquis is the closest to that at the moment.
On that bombshell, we'll move on to our actual new admissions on the flip side of companies coming to market. We had Helium prospect from Helix Exploration. That was David Minchin's new venture with Bo Sears, the CEO, and they announced the commencement of their appraisal well program through a strategic partnership with petroleum consultants headquartered in Montana. So that one was very well received. I think they were funded to the tune of about 20 million, and they also had to turn funds down, so it was massively oversubscribed. Anyone looking into that company?
I think it's just the case that anything helium based, it's just the thing to be in at the moment. I mean, if you look at
AI and helium seems to be the one, doesn't it?
They're both rising, ironically. But I think sorry for the pun, but if you look at Helium 1, regardless of whether what they found is commercial or not, we don't know yet. Obviously saw a massive run. And so people are thinking, right, helium is going to be where the next massive run is. I know there's a couple of other helium IPOs coming up in the next couple of months, one of which hasn't been announced yet. And I suspect it'll be exactly the same thing, like hugely oversubscribed. And then it's a question of, there's very few helium plays on the London market, right? I think it's the same with uranium, interestingly, which is why Power Metals' Uranium Energy Exploration IPO will probably be, again, quite popular because there's just very few opportunities on the market. But now that people have realized, hang on, investors are out, they want to invest in the helium companies, they're all going to try and list all at the same time. It'll probably take the wind out of the sails over the next few months.
There was also another listing, Charles, a European green transition. I don't know if you saw that one. That was Cathal Friel's venture from
Midas touch for that.
So yeah, I'd be interested to see how that one does. But it's certainly risen quite well since its listing about a week ago now.
Yeah, well, I think it's, often it's about the management teams. Paul was talking about management. It's the teams behind it. Cathal HVivo with previously Open Orphan and then a couple of others.
Amrit Farm.
Yeah. I mean, every time he is, a senior figure behind the company, it tends to do well. So, I suspect that regardless of what his next venture was, there was a large number of investors who made a lot of money from following him who would have done, exactly the same thing. He could have said, right, we're going to create we're going to go do some cloud seeding in the Middle East. And they would have gone, bam, yeah, we're in, let's go invest. Yeah. But it's the case, isn't it? If somebody makes you a lot of money and then they want to start a new venture, you're going to back them, aren't you? There's just, it's that personal touch. It's simply
but then they can very quickly be tarnished. I mean, we saw one a couple of weeks ago or the last week, unfortunately, and the one that was very close to us, we talked very frequently about the company, was Ben's Creek. Obviously, you saw the news where they initiated Chapter 11 bankruptcy proceedings for the U.S. subsidiaries through the U.S. Bankruptcy Court for the Southern District of West Virginia. And obviously, there was closed down operator, or put it into care and maintenance effectively. So a real sad ending by the sounds of things. And as I say, Kevin and I visited operations there twice. So it's obviously painful to see that unfolding. What did you make of that news, Charles?
It's sad. Obviously, it's not something that's great to see. I think that a lot of people are going to blame a lot of people, and you might get talk about like management salaries and what's been taken out of a company over the years. But I think this is you can have an excellent asset, but if the financing is set up incorrectly, then it can be a disaster. And you saw this with Carroll as well, and you'll see it with others, especially as the rates rise. I think this is the number one thing. I suppose the lesson you want to take out of Ben's Creek is that it can't just have good management or a good asset. It also has to have decent financing behind it. I mean, what do you think? What do you think?
I think that they're listed into a sort of perfect storm of rising met coal prices. So they came to market at a time when it was moving up, and then obviously there was a massive reversal in those prices. Whether that for whatever reason, demand etc. coming out of COVID, and then there was maybe an oversupply, and then sadly that took away from the bottom line and eroded those profits. So when a company becomes non-profitable, what can you do? I don't know. What are your thoughts on it, Kev, as well? Because we've talked about this one for a long time.
Yeah, I think sadness is the first emotion, but if we take emotions out of the equation, then it was always a play on the met coal price. The met coal price scooted up to $450 a ton, and the share price did go up to £1. Basically, they were mega profitable that point, but that wasn't the point that they were producing lots of coal. They then had many problems. Let's be real. They had many problems in terms of the high wall miner, the second high wall mine. Then one of the high wall miners got stuck.
Then they couldn't get trains in quick enough.
Then the trains were a problem. So there was all of these delays. Every time a resource play has delay upon delay upon delay, what happens? It costs them more money. I mean, the one that comes to mind is now, is it George in Premier African Minerals? It keeps getting delayed. What does he have to do? He has to raise more money. Every time it gets delayed,
more and more.
He gets more money. Now, that's not what happened with Ben's Creek, because they did have backers. But the problem was that the backers were then the major shareholder as well. And now, effectively, it looks like Avani is going to take over the asset. Whether they continue that will be down to the met coal price. Simple as that, because if the met coal price is $220 or more, I think it is, then the operation works and is profitable. But if it isn't, then it isn't. And then you need to have somebody with big pockets behind you to be able to go through that period of time. Well, what I see is Ben's Creek didn't have that individual with big pockets, or they weren't willing to go through that period of time until such times as it became profitable again. Because again, this week I saw that the big met coal producer in America was actually hit record highs again. Warrior Met Coal, $66, and it's gone up. Why? Because they've got big pockets, they've got an ability to go through this period of time, and they've hit a an all-time high, probably because all the production is going to fall off. Things like Ben's Creek, their production is going to fall off. So that means the met coal price will rebound because there just isn't going to be enough of it again. So I don't know. What do you think, Paul?
Well, it just demonstrates the difficulty of bringing a vehicle to market when you are reliant on a single project or a single commodity. And in the case of the commodity, it's largely speaking out of your control as to what the commodity price does. So you address that by making sure you only bring a vehicle to market if you're absolutely sure that you have access to the finance in case it turns against you for a period. And if you don't, you become a gamble, the outcome of the commodity price, and it's a great shame. But I think also from an investment perspective, it's an important salutary lesson of the entire market with this type of scenario. And it's happened with Horizonte, of course. You know, we've seen collapsing share price from £1.50 to like under a penny. Is that whatever you think about the quality and potential of a company, some degree of diversification is absolutely necessary to protect yourself against the unknown.
100%.
Yeah.
Well, actually, you must have my notes because that was what I was coming on to next. Was the Horizonte Minerals obviously looking at the announcement that they have the inability to secure the necessary financing to complete the 100% owned Aragua nickel project, despite extensive efforts and negotiations. And they engaged with over 150 parties, and 39 entered into NDAs to explore debt and equity financing option. However, due to unfavourable nickel market conditions, another thing as well, you know, we're looking at nickel, and particularly influenced by the obviously supply surpasses from Indonesia and global demand uncertainties, potential investors have withdrawn from it. And consequently, Horizonte is exploring alternative strategies but cannot consider so. Care and maintenance, again, it's a similar scenario, isn't it, we're seeing pan out?
I just, Horizonte, without wanting to get sued. I mean, I ran the numbers when they released that original RNS and they were saying CapEx would be 35% more. I said that in that event, it would only need another sort of $50 or $60 million, which is pennies, right, in the terms of the scheme of that particular project. And then a few months later, after, you know, management got kicked out and they got a different review team on board, they decided, oh no, it's actually 87% higher. Not 35%, 87% higher, with over $1 billion of capex, with the nickel price in the floor. It just became very clear to me at that point that Jeremy and the management at Horizonte, and I was not invested, but I refuse to believe that you did not know that your capital requirements were going to be double what they were, you know, for months before that information was released. How could you? And if you didn't know, then you're the most incompetent person that anyone has ever met, and you should never run a company ever again. As simple as that. You can make the argument that, well, the finance maybe wasn't great. Yes, the coal price is what sunk them, you know, but, you know, had the coal prices stayed high, they probably would have been all right. And with Horizonte, even if the nickel prices had stayed high, your capital expenditure requirements doubling isn't something that happens on a project that size without incredibly poor mismanagement.
So will Horizonte, the project that Horizonte have, be in production in the next sort of 5 to 8 years?
I think that
it will be taken over by one of the majors for an absolute discount price.
Yeah. And then they'll probably, obviously, if you're looking at like multiple years before you get it online, nickel might improve by then. I mean, the big question is with nickel, as you mentioned Indonesia, all these mines are opening up in China, and it's called dirty nickel because it's terrible for the environment, what they're doing. Aragua and what they're doing there would be clean nickel. And the question is whether you can charge a price premium for the greener nickel. I mean, economics suggests no, that's never really worked in the past. But given the kind of ESG requirements for a lot of companies, it might be the case that you get a premium for nickel that's mined more environmentally friendly. But yeah, it'll be taken over for a song, and that'll be that.
Yeah, but we're running on a two-system scenario. What do you think of this, Paul? I mean, because there's a great part of the world that ultimately ESG is, they're laughing the West in terms of ESG, because it's like, well, we're not doing that. You know, why would we increase our costs because of that?
The concept seems fine, doesn't it, to make sure you sit on top of the ESG factors. And for many elements of that, there's good logic and good sense in looking after environment, the people, the way you conduct business. But when it comes to the environment debate, we're on a bit of a losing thing here, because the main people that are causing pollution don't really care. However, let's not forget the quality of the politicians we have who have realised the taxation revenues that are possible with as many green initiatives as they can introduce. And I think it's become a situation now where the taxation benefits are so huge that we're on that road, and I don't think we're coming off for a while.
Yeah, I mean, our example of that, when we were in Zambia last year, we went to Kabwe, which is the place where Jubilee...
Stable mining, is it now?
Stable. And they were doing the copper, okay? So they were electrolyzing the copper and coming out with pure copper. But when we got up onto the gantries to look over what was happening in Stable, about a mile further to the left, there was a Chinese outfit, and there was just literally plumes of gas coming out of this thing. And we asked what's going on over there, and they said, well, that's a Chinese operation, and yes, all of that stuff is highly toxic and very bad for the environment. So the people of Kabwe stressed, like, they're gonna have real problems elsewhere.
It's one of the, I think it's the most polluted place on the planet is Kabwe, from all the the cyanide and all the leaching and things like that. But as you say, they're just burning. The Chinese are just burning it into the atmosphere.
Okay, so the scenario is an added cost, and therefore the Chinese can use that, or whoever decides that ESG is not appropriate, they can use that then to develop and to manipulate prices of all of the things.
And that
anyway, well,
nickel, what happens to the rest as well? Yeah.
So while I come on to that, then, and obviously we're going to Zambia, let's talk about the copper price. I mean, I just looked at it before we came on to record this. We're talking about $9,650 per ton now, 4.4 per pound if you're in that equation. And everybody, whether it's Goldman Sachs or whoever, are predicting $10,500 per ton. All of the producers are going to be extremely profitable at these prices. And there isn't enough. There is a copper shortfall. It's come forward probably over 2 years, this copper shortfall. And we did interview Colin Bird yesterday, didn't we, Charles?
Yeah, we did.
About African Pioneer. And it was very interesting that, he was talking about the electrification of things, but actually saying, well, it's not just about the EVs and the cars. It's the guy wants to have a fridge freezer. He wants to have an extra freezer in the garage because he needs to keep some more food in there, or whatever, a new TV, or now the house has 3 TVs instead of 2 TVs. He has 2 cars instead of 1 car. Whether it's an EV car or not, he needs copper. So, I mean, what's people's thoughts on the whole copper bull situation? Because, I mean, we're looking at African Pioneer, Galileo, we're looking at Extract, we're looking at Jubilee, we're looking at East Star Resources, which is looking pretty good as well. What are people's thoughts on this?
I think I've got multiple thoughts. I mean, to start with, every major mining company, every analyst, everyone has been saying that at some point in the 2020s, there'll be a copper boom because of the supply gap. Now, there's a couple of really interesting things. The first is that in the 1990s, copper exploration budgets, they were roughly 50% of annual overall copper budgets. And this has fallen to just 34% by 2021. And now it's taking about 16 years to start and develop a new copper mine, and that's almost doubled over the past couple of decades as well. So you're getting far less money being spent on exploration, and if you do find something, it takes twice as long to open up. And the problem is that, which means you're not finding decent deposits, and you're not finding them fast enough. So if you look at Rio Tinto, everyone should know Rio Tinto. So Oyu Tolgoi, which is their new mine they're going to have in Mongolia, and it's been said this is the most important new copper deposit that's been found in the world for years and years and years. You're going to need 12 of those equivalent copper mines by 2030 up and running to meet the expected demand. And it's not going to happen because we simply don't have them. So the supply gap is going to be massive. And what Colin was saying yesterday, that a few years ago, the majors had quite high standards, essentially, for getting involved with the copper projects. But now they're getting involved with smaller copper projects with less potential because they simply need to maintain the supply that they have. I think we're going to see a huge increase in the copper price over the next few years, and it's barely got started. It's going to be the story of the 2020s, because unlike, for example, lithium, you could potentially use other metals, not as well, but you can use other metals to replace it. You can't really replace copper with anything else. I said you can use aluminium in some applications, but it's simply irreplaceable, and it's such an important metal, and there's just not enough supply coming online. It's as simple as that. There's just not enough exploration. There's not enough projects, and you're seeing this with BHP bought Oz Minerals, for example, or the merger between Newmont and Newcrest, and Newmont did it. A big part of the reason why is to get hold of more copper assets. But just because the majors are buying up the copper assets, it doesn't increase the amount of copper that's in the world that's going to come up. It's the same amount of copper, and you're just shuffling decks on the Titanic. What do you think, Paul? Do you reckon we're in for a copper run?
Well, I'm just in shock because the guys didn't mention golden metal resources.
Madness!
But I've managed to get over the offence.
Well, the reason why we didn't mention golden metal resources is because we were going to talk about tungsten a bit later, but don't worry.
You know, I said years ago, it's poorly named. It should be tungsten metal resources. Copper.
Listen, let's not attribute blame, given that I named it. And
Oliver will be on to me or something. Why didn't you mention it?
So, Paul, give us your thoughts on the Garfield update that we saw on this.
Add the first question first.
I think it's interesting. Isn't copper up like circa 50% over the last 4 or 5 years in terms of price? And if you look at the chart of where these commodities have come from and where they're going, it doesn't half look. The dual effect of the supply attrition with the demand increase and the triple effect and the lack of discoveries is a intoxicating mix. When it finally filters down to these innovative juniors who will find the deposits, because the majors don't really appear to be able to find much with their vast teams, they should be quite explosive. And if golden metal can actually, capitalise on Garfield, that would be great. What you do see, I see in the background, because I still speak to some people, is that there's quite significant capital availability coming in for decent copper projects. And there's also a lot more discussion amongst the institutional kind of backdrop about where they can invest from a copper perspective. So all the signs are there that we're going to see well-funded juniors operating in copper, making good discoveries, and investors making good money. Yeah, Garfield is a project that principally interested me at first because it was named after my favourite cat from the 1980s. When we built Golden Metal, we started out building with I could get this wrong actually, but I think we took Golconda first, which was the gold target in Nevada. Then we moved on to Sunrise Resources, and we took 2 of their projects, which Garfield and Stonewall, and then I think Pilot Mountain, the tungsten project, came in last. We were originally thinking that it would be a gold-focused business, in fairness, and hence we called it Golden Metal Resources. There was the shift. I hope I'm not giving too many secrets away. There was the change in the London Stock Exchange. If you remember, Main Market increased the minimum market cap a couple of years ago from 700,000 to 30 million. In my personal view, quite an idiotic decision. And then expected that AIM would pick up the reins on the juniors. Well, AIM were out to lunch when that message came out, because they, at the time, were insisting on companies having a minimum 10 million market cap. That's not in the rules, by the way. That's in the sub-rules that no one talks about publicly. And a whole heap of other conditions, like you had to, raise from institutions who were simply not interested in companies at 10 million market cap. So it was an impossible situation. But sat there in the middle of that portfolio was Garfield. And it was quite a small footprint project. And Oliver did his work because I think Oliver may be robotic, in terms of the amount of work he's able to do. He can, he works 18 times the work of a normal human being. And he was able to identify some interesting kind of geology. He pursued it quite calmly and professionally, as he does, and then he seems to have walked onto what appears to be potentially a tier 1, copper deposit with a bit of a uranium twist and other metals as well. Yeah. And I can say from what I know of Oliver, with his degree of professionalism and seriousness, he never really gets excited about things, and he seems to be bubbling with excitement with his golden metals portfolio, including Garfield. So I'm very optimistic on that front.
Good. And the tungsten itself, and the elephant in the room in terms of the grant. Do you want to spill any beans?
No, I think I went out to Pilot Mountain was part of Thor Mining when I was on the board of Thor, and we went out and we did a site trip. It didn't start remarkably well because on the plane over we all got food poisoning. So I can assure you, the 5-hour trip up to Pilot Mountain project from Las Vegas Airport was the most interesting thing I'd ever had. And at the time we got to Area 51 and the gas station there, I thought that the 4 colleagues that piled out of the vehicle and sprinted at full pace into the service station were actually interested in buying alien souvenirs. But that wasn't the case. They were all trying to get into the same toilet at the same time. But what struck us, apart from some kind of gastroenteritis, was the scale and potential of that project, its infrastructure, the location, the support of the local town, everything was right for it. And I couldn't necessarily persuade Thor to spend as much money and put as much focus on it as I wanted. But, you know, it's a bit like Victor Kayam with the Remington razors. He liked it so much he bought the company. Well, I liked it so much I bought the project for Power Metal. And it was always scalable. It had always had the potential to add, 2, 3, 4 times onto the size, maybe more. It always had big copper potential. It was originally owned by Duval Copper, sold to Union Carbide for tungsten in 76 because Duval Copper didn't find the copper that they wanted. And then I think it was Thor Mining itself got the highest, grade intersection through the drill work. So the copper potential is there as well. But it's the tungsten and the potential of US support. At the moment, the US have a ban that's coming in January 26. I don't think they can buy tungsten from certain jurisdictions, the main ones, if they're using it in any defense applications. And I'm sure at some point China will decide to put a ban on export of tungsten anyway. The US supply is low. There's no, recorded production of tungsten in the US. And Oliver's sat with Golden Metal with a massively strategic project. I mean, it astonishes me that even in today's conditions, the market hasn't fully reflected the value of that project. But I'm sure it's coming. And I hope for investors in the stock, they're able to, in these horrible markets, hang on, for as long as they can until they need the money to get some exposure to that when it does rise in price.
Yeah. Well, what is the situation, Paul, in terms of your own personal holding in that, or do you just hold it through Power Metal?
I don't talk about personal holdings.
No, I'm asking you.
No, because, for 2 reasons. One, because I don't, and secondly, because, my wife's next door.
I like that one.
Because I was going to move swiftly on to Conroy Gold, which you and your wife hold.
Very good, Gerd.
Okay, so copper. I mean, what's your thoughts on it, Phil? Copper. We're off to Zambia next week.
It's exciting, isn't it? I mean, yeah.
What's going to happen over the next 5 years? I mean, Paul was right. Copper from 5 years ago to now is 61% up, I think, in its actual price. Okay, so that is the start of a bull market. Now, obviously, it was at the beginning. Everybody's predicting much higher, but yeah, give us your thoughts.
Yeah, I mean, well, we've talked a lot about copper in the deficit element of things, and I think Zambia as well has been big problems, as we know, with the electricity and a lot of the flooding and things with some of the producers, so that they're not making their the annual tonnage that they want to, so that it's been fraught with that as well. I think there's been supply issues all around the world. So, I mean, as Paul said, it's probably risen, 40-50% over the last 4 or 5 years. Is it going to continue on that rise? And I suppose it will with demand there in the market. So, yeah, it looks good. And I'm looking forward to seeing how things have changed at the various sites that we visited last year with the likes of Jubilee at the Rowan, copper concentrator, at Sable, as you alluded to earlier on, and we saw the copper cathode, and there should be the expansion there at Sable. And then, of course, you've got all the the Mopani tailings and the Muffalera slag project as well, which have been announced. And that doesn't take into consideration Galileo Resources, Luansobi, which we talked about this week, where on the Zambian website we've seen that a license has been granted there for Luansobi. So it all looks very exciting out there. I'm looking forward to seeing how things have moved on at the various projects.
Yeah, as a point of note, Galileo has not issued an RNS for that yet because they haven't received the documentation. That was quote directly from Colin Bird and Martin Churchhouse yesterday when we were doing the thing. So it's coming, but they're just making sure they receive it and then they can RNS it. Yeah, well, let's move on to gold. I mean, we talked about GMET's got gold, the Scaran type gold, if that's the right word, in Nevada.
First class metals.
You've got first class metals with a gold project. You've got Conroy Gold. You've got Greatling Gold. So let's take them one by one. Paul, you're obviously an expert in Conroy Gold. Give us your thoughts.
God, I mean, the company listed in 2000.
2,000 years ago?
No, that was a different event. Yeah. You're confusing church with the Irish gold exploration. You've got to be careful. I hope that sums it up for you. For years I've been following this. In 2011, when we did Mining Maven on-site interviews, we went out, and I've been to the project 3 times, and it's got huge scalability. I wish the company hadn't spent quite as much on central cost and more exploration. They've had recently, a joint venture partner putting in a lot more money. We're seeing quite a few more results. I find it difficult as an investor that knows the business to understand the full context of what they're doing and how it all fits together. I see the results come out even with 13 years knowledge of the company, and I still don't quite get how it fits. It feels like a company, and it always has, that should be vastly more valued than it is. The 60-kilometer gold trend, multiple hits along the way, lots of different potential partners, talking with them, getting involved with them, and it just seems stuck. I mean, what's 47 million shares in issue at the moment? A share price circa 12p, is it? So you've got a 5 million cap for a company that could hold, multiple large gold deposits that can be mined. I know, Northern Ireland, there are environmental related challenges, community related challenges, but I always felt that company, above all, had them well managed, and they were dealing with the local population and those risks that you get from an ESG perspective in particular. But it just never seems to shine. It's had plenty of opportunities for people to make money, especially from this kind of level. You've seen it pop its head from 10p to 50p a number of times. It feels like if it has a bit of positive news with the gold price circa 2.4, it may well go on a major run. But in my mind, I've always felt a major run was for it to go to £2.50, not 25p. And it's just not done it. So I'm a bit at a loss, and I do hope they've got some staggeringly fantastic news that they're going to release that's going to really make our day. And not quite that I'm losing faith in it, because, of course, faith is something which can't be proven. But the hard facts at the moment for investors, I think, are just not really there.
What do you think, Charles?
I think what it is, obviously, they signed the joint venture with Demir, done roughly 6,000 meters of drilling, and investors now who aren't in it are watching and looking for phase 2. And I guess the argument is, obviously, if you're looking since the year 2000, then maybe, there's more history there that I could put together. But I guess the argument is, okay, so phase 1 was just trying to find where you should be looking for the best gold, and then phase 2 is going to be much more specific drilling locations. And then phase 3, where you're looking at a bankable feasibility study. Assuming Demir signs up for phase 2 and so on and so forth, then I think you're probably close to a bottom in terms of the share price. But I do agree it's one of these companies that A, probably should be valued more highly, but B, yes, the Irish location doesn't help, but it's for C, it's more, maybe it's just not going as quickly as it should in terms of drilling and getting results out. You have a large amount of money in the joint venture, get the essays out, and then find where you want to go and just get cracking, I think if, for example, you had, Oliver Friesen was in charge of the assets on Conrad Gold, he probably would have been, got cracking a lot quicker. But at the same time, I wonder, it feels to me sometimes like it's kind of like a child in a sweet shop. The area they have is so vast, and the strike could potentially be so long that they want to search everywhere, and potentially a better strategy would be, let's concentrate on a handful of our most prospective places, get some really good grades out, and then just, try and get some gold out of the ground. Because it feels like it's been going on for years and years. And yet, I would still say the opportunity is still very good if you are a long-term investor and you're willing to be patient, at least as patient as Paul and his wife has been.
I think that another problem, not a problem, is that when you're dealing with the Demir, who are effectively a privately run organisation, who are not used to putting out frequent reports and a sort of strategy surrounding that project, like you would with someone like First Quantum or Rio or Glencore or whoever, then the lack of information is very telling in that respect. So I think Conroy are not getting a massive amount of data back from those reports, or as much as shareholders would expect. And I think Paul's right. It needs, and you as well, it needs a clear plan of, we're going to do this, we're going to do that, we're going to put out a technical. I mean, look at Oliver's technical reports that he does on each R&S. It needs someone to go through them and what they mean, to explain to shareholders who really are in the dark on it.
This is the Oliver Friesen appreciation show, or what?
Well, it's not just all of it. I mean, the thing is that what he does very well, obviously he works very hard, but one thing he does very well is when he does a video explaining, what it is he's found, like a Garfield or Pilot or whatever, he can break down very complex geology concepts so that the average investor can understand, and then their confidence in their investment is much increased, which is a really difficult skill to have to acquire and is really valuable. So, you watch one of those 10-minute videos, I've got some pretty decent background knowledge, but a 10-year-old would be able to follow what he's saying. That's valuable, that's helpful. And if Conroy were to say, look, between all at Bridge and Skull Martin Gold Trends, we've now got over 1,000 square kilometers of potential gold mineralization, which sounds insane, but, it is potentially true. Explain that, get investors to understand that. But it requires getting in front of a camera and spending some time and effort doing it. But until they do that, until they get that information across themselves as a company, it'll be difficult, because when there's 100 junior resource companies on AIM and there's more listing on Axie and whatever else, you need to put yourself front and center all the time to get the attention of investors. As simple as that.
Yeah, indeed. Obviously with gold, I mean, the margin on the gold is, with Conroy, we're talking about an explorer, but with Greatland Gold, we're talking about a gold producer within the next 12 months. So what are your thoughts on Greatland Gold?
Well, in fairness, Greatland Gold is a subject I don't like to talk about very much, because refinanced and restructured Greatland in 2016. And I was on the board for a few months just as part of that process. And at one point, I did actually have, with shares, options, warrants, whatever, 130 million shares in Greatland Gold. And I have to say, I did sell them some way before they hit 38 pence. So it's a source of constant chagrin to me that I missed out on £35 million. That said, I don't have a great deal of love personally for development stories. I think they're a nightmare. They're usually very boring, that you have to have a good medium to long-term view to hold with them. The risks are super high. And I see the share price is down to circa 6p at the moment, which I'm sure is disappointing for a lot of the holders that had great aspirations of it going considerably higher. And I do know that deep deposits, definitely the preserve of very, very large organisations, especially when you come across all sorts of decline problems and challenges on the way through. So not for me, I'm afraid, but I can understand why people can be quite passionate about it, given the multi-years of work that was done to build its market profile.
Yeah, and I think the patience hopefully will be repaid over the next 2 years because of the gold coming out the ground, I would imagine. Because once that happens, then the project is going to be significantly de-risked, you would imagine. What do you think, Charles?
I think, they've proven there's a massive amount of gold on the ground. As Paul says, the issue is getting it out, and that's time between now and then. Now, obviously, Newmont has acquired Newcrest, and the newly combined company has decided they want to offload Telfer, which is the processing plant and the accompanying mine, and also their 70% of Havieron. And therefore, the question is, who's going to buy those assets? Is Greatland going to try and find a way through debt and equity and their various connections to buy those assets and go it alone, which is very high risk but potentially very high reward? Or are they going to try and find another kind of joint venture partner who's a major, who's interested in in Havieron, which, for Newmont and Newcrest, it's not a tier 1 target according to their pretty strict definitions. But for a lot of the Australian ASX companies, some of them have deep pockets and I think would be very happy to develop it. But the question is for you, if you're a Greatland Gold shareholder, what's the exit strategy? Because it all depends on CEO Sean Dane, what they decide to do. Are they going to go with, are we going to try to buy this asset out completely, which I think is a possible solution? They might go through debt and equity. Or are they going to try and find another joint venture partner to take Telfer and Havieron? I mean, there's talks about Northern Star and Fortescue and various other players visiting the area, and rumours there tends to be no smoke without fire. But I don't know. My feeling is that the share price is at 6p because of the great deal of uncertainty about how the asset is going to get developed and how you're actually going to get the gold out of the mine. Once you clear that up, whichever way, you're going to have a very different story. If you just replace a Newcrest with a different joint venture partner, then it all just goes on as before. If you go down the route of, we want to buy out that 70% that we don't have of Havieron and also Telfer, and we're going to raise a few $100 million and we're going to do it ourselves, then the risk profile becomes much higher. But then obviously, if you're buying at 6p now, you might find you make a lucrative amount of money. So who knows? One of those two things, but I think it is mostly uncertainty. And it's been some time now since Newmont announced that they were planning to divest those assets. So if you're an investor, you want to know what's going to happen next. And the problem is that obviously, for very obvious reasons, management can't tell you because it's active negotiations. I would imagine several negotiations trying to figure out what's the best way forward.
Yeah, indeed. What other gold plays can you think of, Paul, that would be worth a mention? And Charles and Phil?
I think, Amaroq Minerals was one of my favorites. They've come down a little bit, but I think they're going to have a really great year. First Class Metals, I think, with their market capitalization right now is very low. So if you're interested in something where you might be getting in very close to the floor on the price, that's quite interesting. Fulcrum Metals and their tailings projects and their technology with extract, that's something else that I think should be on your watch list. But as it goes, I think we've covered some of the more important gold explorers that we should be looking at. Or were there any on your radar potentially?
I don't tend to follow many companies at any one point in time because I'm a bit like a kid in a sweetie shop with these things. I can get very distracted. But I do think FCM is a good call. I think if you look at the price chart over the last year, as the average investor, you'll be horrified. And as a contrarian investor, you'll be delighted and think, blimey, this could go the other way. And I know the commitment of those guys. I was involved with them on the deal with Power Metal to vend in some interest. And I think they'll take this right back up the curve and do incredibly well over the coming 12 months. The one that's not talked about much is Kavango, which is copper Botswana mainly, but we're in the past, but the gold in Zimbabwe and doing some interesting things. And it has that intriguing mix of access to finance, big supporters that are helping to finance that business. So it takes away the threat of our horrible markets and actually doing an active work program, which is a rarity at the moment. So I think Kavango is one to put back on the radar. It was one of the rare stocks, and Ben Turney, who runs it and ran it then, really annoyed me in 22 because he got his share price up to 6 or so pence a share, and he managed to keep it up there. And I kept looking at him thinking, what on earth are you doing? What is it? Are you good looking? Are you intelligent? Are you particularly talented? What is it about you? And I never identified what that was, in fairness. But Ben is a lovely guy, and he's working particularly hard. He's sacrificed quite astonishingly for the development of the business, spending huge amounts of time in Zimbabwe. That's taken him away from personal life in some respects to try and build something. And I tell you what, you've got to back someone that's prepared to give that level of commitment. So I would say go Kavango. It's going to do really well in the coming 12 months.
Yeah, they had a good announcement as well, didn't they? This week on their, I think the first phase of that diamond core drilling on that Karakubis project in Botswana, the Kalahari Copper Belt. So it looks good.
What about the gold in Power Metal Resources?
Power Metal Resources is an unusual one. It's been given all sorts of different names. Into an ETF, commodity ETF equivalent, a merchant bank. It's completely diversified. Although it does now appear to be narrowing its focus, shall we say, on some quite large, chunky things, particularly with the Saudi Arabian developments. So I think, yes, it gives you an exposure to gold, but it gives you an exposure to so many other things at the same time. And I would say, everybody needs a little bit of power in their portfolio.
What do you think is the likely outcome then of the UAE thing? It seems to have paused for the meantime.
Yeah, but I always like these intriguing announcements when, there's a potential for a change of direction. I don't know is the answer. And of course, if I did know, I'd have to say I don't know is the answer. But I would say that with a company, Sean Wade took over from me a year or so ago and has done a phenomenal job as CEO. The level of drive, bringing in Rick Rule, bringing in large investors, including a Saudi Arabian investor, moving into Saudi and really growing the potential of that business. I would say that if that kind of character pauses on something, he's pausing for a reason. And it will not be because there's a small advantage in pausing. It will be because there's a major advantage. So I'm intrigued to see what comes down.
Yeah, I mean, power is just fundamentally just horrendously undervalued on its assets. I mean, it's way, way below its balance sheet. There will come a point where it will rocket. I'm certain of it, and it's a question of time.
Yeah,
Right?
I think the timing is probably going to be around GMET golden metals doing well, and also the UAE uranium play coming to fruition in whatever guise. As we've said, we're not sure now, because I mean, I still think it's going to be a uranium play. I don't know how it cannot be a uranium play, but it can be a uranium play with something else as well. So it's not purely uranium, and that's maybe what we're talking about. And then power will catch up this week. Crazy valuation again now, as it, in old money it would be back down to 0.7, I think, is it not? So 0.75 maybe. Obviously it's 14 or 14.5p, but having split at somewhere in the region of raised at 20p, effectively you're coming in at 25% discount or more to what they last raised at. And yeah, I think with the Saudi thing, I think they really do have access to capital now as well, which will be very exciting in terms of what's going on.
I mean, if you go back to everything that Power did in terms of building its project's interest, we did vast amounts of research before we did it. And the uranium portfolio, when we started staking it in, was it 21? I can't remember. Might have been 21. Yeah, it was 21. We already had identified the ground. We'd done vast amounts of technical work on the ground, and a lot of it was open. But when Sprott started buying physical and the price was started to move, we then went straight in. That prepared that I got the budget agreed by the board within an hour. We'd already done pre-planning on it, and then we were staked up on the first batch by within 2 hours. And we had the pick of some incredible ground. So now they've spent whatever it is, £500,000 or so, I don't know, a proper program in 2023. And they've been picking up these major targets. That wasn't unexpected. It was planned in advance. They were very confident that if they were able to spend the money on the ground, they would pick up these big targets. And that, the quality ground, the big targets, the work that's been done has added tremendous value to that portfolio. And it is very, very large, circa 1,000 square kilometres. I don't know how many projects it is now, 15, 16. And it has immense value. So I think it's a bit of a game changer, the next step that they take with that portfolio. And that of itself could be a source of re-rate. But I think you're right. I think gold and metal zipping up to 50 pence a share with shares and warrants will give Power Metal, 25 million quid or so of value, and will instantly demonstrate the undervaluation of the business without anything else.
I think it also will demonstrate that the market model works, the spin-out model, because in the US, the kind of merchant bank, or the kind of like spinning out, getting assets, proving them a little bit, and then spinning them out, is like a very common strategy. It's not that common in the UK. So with Power Metal, can go, right, gold and metal, we spun it out, it succeeded, look at us, yay. When they do the next one, whether it's UE or FDR or whatever, people are gonna, it proves the business model works. And I think that grant funding for Pilot Mountain, those grant applications went in kind of like June, July 2023, and it tends to take about a year. So you're hoping this quarter there's going to be some information back. And if they get a decent grant to the tune of, at least a few million, hopefully more, then it's going to massively improve the economics, especially if you're already going to be drilling by that point. So, yeah, I think gold and metal is going to be in for a really, really good summer.
Yeah, I agree with you in terms of gold and metal. I think that could well be a big catalyst. What I would say is that when gold and metal came to the market, it was a tungsten play with the possibility of Garfield and the copper. And the interesting thing, when we had a conversation with Oliver this week, and it was the first time I really realized the quantum, was that there is a hell of a lot of silver also at Pilot Mountain. In situ, in ground, it's worth about $180 million. And then you've got the potential garnet, and you've got the potential copper, and I think there's zinc involved as well. And then obviously the prize, which is the tungsten. Now, that aside, if that all gets basically proven up and they can increase the amount from, I think it's 12,000 or 12 million tons, I don't remember exactly the quantum, Pilot Mountain, and increase that to 25, 30 million, whatever it happens to be, then I think the for sale sign goes up. that's going to be worth, I don't even hesitate to think how much it could be worth, but it's going to be in the hundreds of millions of dollars in my view. And then you've got Garfield now, which is now a potential porphyry copper, which could just be mind-blowing, in terms of another type of project that's at least as good as the tungsten one. So this would make, the power metal resources valuation right now laughable. And, you've still got, as you've said, Paul, the uranium, the gold in Africa. You've got the Saudi thing, I think, is going to be a game changer because ultimately they're going to come with deep pockets. And those guys are more than happy to put their money in and say, right, you do the job. And I think, having spoken to Sean, that's his intention, and that is exactly what I think is going to play out. It hasn't happened yet, obviously, but I think it's to happen. And I think we've also got plays like that. I mean, the last one I want to talk about is East Star Resources, because I really do think East Star Resources, with its copper plays in Kazakhstan, it's a bit similar to the scenario with Garfield. We've got VMS stuff that they're now going to try and sell or JV or whatever to bring cash into the company. But they've got the BHP stuff now, which is a big porphyry play, a copper porphyry play, which could be huge. So again, I think Alex is another one of those people, a bit like Oliver, young, dynamic, a lot of work, lives in Kazakhstan. From my view, it's gone from, the low ones to up to 3p now on this news. But I think when the news comes and it hits in terms of this is how much money's involved, people are going to realize, wow, this is still massively undervalued. So I don't know what your thoughts are on that, Charles and Paul.
Yeah, I haven't been following East Star that closely, I'll be honest. They received an export grant from BHP, didn't they, at some point? Yeah. So the BHP export program is literally grant funding from the major. You don't have to pay it back. And it sounds crazy, but it feels like there's no strings attached, where informally there probably are. Maybe handshake strings, but not real.
I think from listening to some of the interviews, I think what actually BHP do is BHP basically have an interest in a project. So they give you some money, try and turn you into a bit of a mini BHP, as in, this is the way we do things, guys. And then if the project comes to fruition, then they take it up.
Yeah, which is, great. I mean, there's another export grant in Zambian, was it Cobra? I can't remember. But yeah, I mean...
Yeah, Cobra.
The key point to understand is, if you're looking at these companies, is that if they've made it through the BHP export program and they've been given a grant, that's a lot of due diligence already done for you, So... And as you say, Alex, I think he works hard and he wants to succeed. So, prove it up, sell up, and off you go. It's not too tricky, is it? I mean, that's the name of the game.
What do you think, Paul?
I've had East on the monitor for a while, but not really looked into it in too much detail, and seen the price skip. The market cap, is it about 6 million quid now?
Yeah, around that.
So, I mean, it's still right at the beginning of the valuation cycle. So
no, it is. I'm invested. My average is over 4 because it bombed because of the marketplace, and it had rare earth assets, and that's what I really liked about it. They really turned out they're probably uneconomical, and it still has gold assets, but they've been put on the back burner because basically the VMS system for the copper is now pretty much ready to go. There's going to be a JORC report coming out that he's signaled in the next week, and that JORC report should then basically have a sales title on it. In other words, people are going to be buying that, I think, and that's a dig up and the processing plants there within 10 kilometers. But the real big game, if you like, is the BHP thing and the porphyry systems that they think are there in Kazakhstan. They are there because this is on a particular belt. It's just a case of whether they find them. I mean, if they find them, you've hit the jackpot, I think, with East Star. But I think there's a mini jackpot to be had in the next short term. And the other one, which is rare earths, and
Cobra Resources, isn't it?
It's Cobra Resources, rare earths in Australia. This to me is a superb play. Like, they have a gold asset with 90,000 ounces of gold. So that underpins the market cap of about £7 or £8 million, which is what it is at the minute. And they've got a rare earth project, which they've now an in situ mining situation, which means that they can produce the rare earth cheaper than the Chinese can produce them. It's in Australia. So this could be an absolute game changer, and one that will produce absolute buckets of money if it comes to fruition. So I think they're going to be very interesting play in the next sort of 12 to 24 months. And it's not going to take much longer than that. I think they're just going to prove it up. And then once they've proved it up, again, I think it's going to be another situation where the for sale sign will go up and it will be worth, a few $100 million at least.
Yeah, I think if you get it, those kind of stories are the ones that will draw the market, particularly in the early recovery stage, when you've got some big points that you can hang your investment around. So many of these companies have just struggled and not done anything material. If you've got something that is still lowly capped and has a few major developments that have occurred in recent times, you kind of got to be onto a winner, really. It's not quite, chucking a dart at a dartboard and any number wins at the minute, but it feels like it's building to that point.
I think we were told, Colin was saying it yesterday, but it's a conversation I'm having more and more. The junior resource sector needs a win. It needs somebody either to develop a mine on time and generate profits, or to find like a massive deposit. And you need like a Greatland Gold, essentially. You need to have like the share price rocket and everyone go, wow, what's the next one? What's the next one? And we just haven't had that for a while.
Absolutely. Really. That's the next big event, isn't it? Where you get punters going, wow, I want a bit of that. And then you know what I mean? You bring the liquidity in, you start that snowball.
Yeah. But it's not just like, for example, we're all kind of we're hoping that Oliver's got it with like Garfield, for example. But it wouldn't matter if it's not a company you don't own, because it will bring liquidity back to the entire sector.
Yeah, it doesn't matter. It's about having those. There's one or two bag, 10 baggers every sort of once every couple of months or something that we used to see. I mean, during COVID, we were seeing 10 bag. How many 10 baggers a day were we seeing at one point? It was ridiculous.
How many free money from the government? People sitting at home pressing buttons. But the thing is that we at some point all of this money that's being spent is going to find something great. And when it does come, and it'll be all systems go, because it's just a fuse that just needs to get lit, and it will happen eventually, inevitable.
And I do think that the majors have got the cash, and they're ready to deploy it. The problem is their systems are a bit slow and a bit. I mean, you talk about Rio Tinto, even there with Tyrian in Rwanda looking for lithium. They have moved into a whole new country just because they think how good they think this asset is. That's unheard of, really, for majors in the past. They would not have moved into a country just for one asset, no matter how good they thought it was. So the majors themselves know that they are depleting their mining assets and they have to renew them. And they're not going to renew them themselves. They have to renew them by buying other assets from other people.
And they need that security of supply, because you buy the juniors for that hope, like massive capital increase. You're hoping for the share price to explode and to make a massive amount of money. You buy the majors for the dividends, right? You look at Rio Tinto or Glencore or BHP or whatever. They're all the same. You want that 8-9% annual dividend year after year after year. And if they don't have the security of supply, they won't sell the metals and the dividends will stop. And that's their entire market. So they are going to open up the checkbooks. And what I find really fascinating, I think one of you just mentioned it near the start, is that the juniors are very good at exploring and finding the assets, and the majors, for whatever reason, with all the money they have and all the resources they have, they're just not very good at finding things. And you think that they'd be able to fund their own exploration, they wouldn't need the juniors. But the reason why you have these smaller companies tend to be the ones that find the assets on a shoestring. I don't know why that is. Paul, maybe do you know why? It does seem to be that the juniors are far better at actually finding stuff.
Well, Voisey Bay was found when they flew a helicopter over and saw something shiny on the ground. I remember a big deposit in Turkey was found because they needed to stop for a wee. And when they had a wee on one of the rocks, it changed the look, and they realised there was potentially a big deposit there. I think is it more luck than judgment? Probably. I think there's something entrepreneurial about the juniors, about the craziness. There's of junior directors that are really committed, not just the salaried monkeys. If you look at, there's a great video from the Nova Bollinger discovery by Sirius Resources in Australia, where the guy talks about how they found the deposit and the risk they took, and how 2 weeks after they made the major discovery, city suits were crawling all over the countryside, looking at this thing. It's just something about the craziness of the junior resource director that's committed to their job.
Yeah, well, maybe they're not bean counting. They're just, I was saying this the other day that everyone in the junior resource sector who's a CEO or director, it just seems to be a little bit insane, and it makes sense, you know. If you're going to be crawling, you know, through the bush in Zambia filled with snakes instead of like in a corner office flirting with girls, yeah, I mean, it takes a certain kind of mentality to do that. I mean, you knocked a memory out.
You wouldn't wear your Armani suit for that, Charles?
No, probably. I don't know. I'll wear t-shirt and jeans today, sadly, but no. No, but it does matter though. Like, I mean, I've been out to a lot of these sites. You guys have as well. It takes a certain kind of person to want to do that kind of hands-on physical work. Now, I really like Paul dislodged a memory. Sovereign Metals, when we chatted to Stepan like a few months ago, when they were originally searching for graphite at Cassia in Malawi, and then one of the locals, you know, they were driving out. One of the locals said, "Stop! Like, we should have a look at this bit here." And they got out and they literally kicked the ground on the rutile, like flakes of titanium, were literally just on the ground everywhere. And they were just kicking it around along the road. And yeah. So maybe it is to, you know, sometimes you just get lucky. Maybe that's just a reality. And the majors aren't lucky. What they're doing is maybe it's too much bean counting and not enough just getting out there and getting stuff done.
Okay, very last question, guys. The English clubs bar Aston Villa all out of Europe. Who is going to win the Premier League and who is going to win the FA Cup this year?
City are going to win the Premier League for sure. They'll bring it back. Liverpool throw it away. Arsenal have started to drop points as well. That's my take on it.
Who's going to win the FA Cup?
Well, I'm going to say United, aren't I? Because we knocked you out, so I'm going to go out on that and say we'll go on to win it.
Being from Manchester, of course, you know, with an embarrassment of riches in the footballing department, I decline to comment.
You're asking the right two people, Kev. I mean, the Charles doesn't, you know.
Maybe you decline to comment there.
Decline. He's got inside information. I don't know. I mean, I follow the football loosely. I think Arsenal are in with a reasonable chance, but yeah, I think Man City are probably going to win. They're probably in the best form at the moment. As simple as that. And I'm a fairly objective observer. I mean, whoever makes me money on the gambling, that's the people I'll be supporting on the day.
Yeah, I think Manchester City will win a double. I think they'll win the league and they'll win the FA Cup. I was gutted they went out, and I was gutted Arsenal went out last night as well, or the night before. Sorry, and Liverpool lost it a week ago, obviously. I think Liverpool are under pressure because Klopp's going and they want to prove something and they're just not playing the way they should. I think someone burst Arsenal's bubble on Wednesday with them losing to Bayern, so I can see them dropping points in the league going forward. And the City have got such a big, strong squad. I don't envisage it'll have the same impact on them, but hey, let's hope it's sport and we get some unpredictability, because I'd like to see City lose or draw a game or two on the way in, and it'll make it bloody exciting. But let's see what happens.
Well, I think, you know, was it 2016 when was it Leicester who won the Premier League? Yeah. I mean, so, you know, anything can happen for anyone making predictions about who's going to win. Yeah. Poor old Gary in his underpants when he made that little bet. Yeah. Bet, didn't he? Yeah.
Listen, we've talked for 2 hours. I think let's wrap things up there and just say, Charles Archer and Paul Johnson, thanks very much for your time. We appreciate you coming on and listening to your musings.
Yeah, thanks, guys. Great.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.